The ever-widening chasm between Wall Street and Main Street, otherwise known as America's wealth gap. It's a trend that is being accelerated by Corona. Remember, I keep saying Corona is like an accelerator of trends. Well, the wealth gap, unfortunately, is one of them. And we see this in action in the Q2 South Florida residential real estate numbers. So on a county level, Palm Beach County, Broward County, Miami-Dade County, single-family homes across the board, the transaction volume fell between about 32 and 37%. Condos were far worse. It fell between 50 to even over 60%. Now, digging into these numbers, though, we see one interesting submarket that not only rebounded in June, but clocked in some cases, record high numbers for transaction volumes. And what is that submarket? The 1 million plus single family home submarket. So in a region that still had a very bad June and that had massive transaction volume drops across the board, why are $1 million plus single family homes in some neighborhoods clocking in record high transaction volume? Two reasons. One, they can be seen as need-based purchases in a pandemic where people perhaps want to move their kids away from a more urban environment. And the second reason is that they cater to the investor class that is benefiting from all the large-scale, unprecedented action being taken on by the Federal Reserve. Now, conversely, previously super hot single-family home markets such as Miramar, Pembroke Pines, where the median home price is just over $300,000, and these neighborhoods were really hot before Corona. Homes were flying off the shelves. They weren't even paying the full 6% commission in many cases. Those neighborhoods were 50% down in some cases in Q2 and still down almost 30% June year over year. They have not benefited because those people, those buyers have not benefited from the actions taken by the Federal Reserve. And not only have they not benefited by all those shenanigans, job losses have also overwhelmingly been felt by people at the lower end of the pay scale. So this is what's unfolding, and I see these two factors of the need-based purchasing and the product types catering to the investor class. I see those two sort of descriptors of a product type moving forward, being helpful moving forward in this pandemic. Find me an asset class that can be seen and perceived as need-based and that caters to the investor class, and it'll be doing well. But meanwhile, something that caters to people who have lost their jobs at a high percentage rate and people who are not benefiting from the shenanigans of the Fed, those product types, not so much. So interesting times ahead. And I will point out, not to launch into a broader discussion on the Federal Reserve, but while the Fed seems to have some moral issue in continuing to bail out Americans, the Fed has no moral issue in bailing out what should be junk corporate debt. Remember, going into Corona, we had record high levels of corporate debt in the last rung before junk. And the Fed has no issue doing unlimited QE, creating all sorts of special purpose, vehicles, all these things of questionable legality to buy corporate ETFs and to bail out corporations. There's no moral hazard there, of course. And of course, we've also seen the Fed's balance sheet do this. So we'll see how all this plays out. Interesting times ahead. And as always with interesting times, opportunities are there. Stay tuned, everyone.